Okay, so what's up, people? Welcome back to Sky and Mark. So recently, I was just I was kind of bored, and I came up with some random gold. Okay, not specifically for gold, but just some random strategy. So I was just overthinking, and I decided, oh, let me just come up with some weird random strategy that just involves candlesticks in the Fibonacci. That's all I need, and time. Yes, so I'll be testing. I actually back tested the strategy, and it's actually profitable in the long run, but I also want to forward test the strategy. So let me just explain the way the strategy works. It's a bit weird. So the way the strategy works is that you only use one time frame, which is the 4H. So what you do on the 4H, and you also need the Fibonacci. So what you do on the 4H now is that you look at the most recent 3 candlesticks in a row. Okay, let me explain it in this way. First, you have to find out your direction of bias, and you work with probabilities and time, specific amounts of time, of which on the 4H we work with 4H periods of time. So the way the strategy works is that for you to find your direction of bias, you need to look for the most 3 recent consecutive candles that had the same color. Yes, so in this case we'll look for the most recent 3 consecutive candles that had the same color. So if we notice, we have this candle here, which is black. This next candle, let me even delete this Fibonacci. So we have this candle, which is black, this candle, which is also black, and the next candle is also black. If you can see, this next candle is black. So that's for your direction of bias, but it doesn't end there. The next candle after that candle has to take out the lowest low of the most previous 3 candles in a row, which were the same color. So here we've identified these 3 candles in a row of black. The next candle has to take out the low. So you can see that our next candle, regardless of the color, it can be black, it can be whatever. So since this candle took out the low of this candle, which is the lowest low of these 3 candles, it means that we will be selling, we'll be looking for sales. Yes, that's how you identify your direction of bias. It means we'll be looking for sales. Whether this candle closes with blue, with whatever color it wants, as long as it took out the low of this recent 3 candles, it means we'll be looking for sales. That's how you find your direction of bias. Then you take trades based on the color of the candle. So if you are looking for sales, you look for the next candle that will close bearish. So looking from after here, there's no any other candle that closed bearish. So look for an example. So as we can see here, these 3 candles, 1, 2, 3, they were bearish, and the next candle took out the low of the lowest candle. Hence we're looking for sales. There's no any other 3 consecutive bullish candles, hence we're looking for sales everywhere here. And we can see that example that we can give is right here. So this candle closed bearish. We can also take this candle and this candle, but I'm looking at a profitable trade. So I'll look at this candle. So this candle closed bearish. So what you're going to do is that you're going to take your Fibonacci, and by the way, you only need the 50% level. You're going to take it from, see, if you're looking for sales, you're going to take it from the high of the 4H candle that closed bearish to the open, to the close of the 4H candle. So from the high to the close of the 4H candle, and you only need the 50% level. Yes, so you only need the 50% level. So you can see I only have 50% right here. And what you're going to do is that you're going to place a sell like that, and your stop loss will be at the 50% level like that. And for your take profit, there's no take profit. Your take profit depends on where the 4H candle will close. So when you take your trade, you have to wait for 4 hours until you close the candle. That's one of the weirdest parts of the strategy. You always have to wait for 4 hours exactly. So you have to be precise. You have to enter this candle immediately it opens and close your trade at the close. So if we can see, this trade was a profitable trade, gave us about 3.79 RR. You can see it opened from here and closed right here. Yes, so that's a profitable trade. For buys, it's the same thing. Let me look for a buy example. Okay, so here is a buy example. So you can see that these three candles, 1, 2, 3, were both bullish, and the fourth candle took out the highest high of these three candles. So we're looking for buys. If we place our fib on this candle when it closed from the low, so when you're buying, you take from the low to the open of the bullish candle. You can see that you can take a long position right here, stop loss at the 50%, and take profit at the close of the 4H candle. So you can see this trade just gave us about 0.23 RR, which is not that impressive, but it's still a profitable trade. And we can see on the next trade right here, the next candle also closed bullish. So since the next candle closed bullish, you can take from the open to the low, and then you buy right here, stop loss at the 50%, take profit at the close of that candle. So if this candle closed bearish, it would have obviously been a loss, or if it hit SL, it would have obviously been a loss. But we can see it was a winning trade, which gave about 5.54 RR, so which is pretty cool. Anyway, so that's how the strategy works. So you just continue doing this process, and yeah, it's a profitable strategy. But I discovered one thing about this trading like that. I found out that it has a very low win rate of about 30%, with also a kind of low average risk reward of about 2.8 RR every 100 trades. So I discovered that the low win rate with the low RR, it's still profitable if you do the math, but it's not worth it. If the RR is low and the win rate is low, it's not really worth it. So I discovered, how can I increase the win rate? So how you do that is simply look at the probabilities. So if you notice here, I have a few dots here. So as you can see, I have an example here. If we notice, we're looking for sales. If we start from here, we can see if we start from here, we can see the 3 consecutive here. We have 3 consecutive, 1, 2, 3. Hence we're looking for sales, and we took out the low. So we're looking for sales. There is no any other consecutive 3 bullish candles, and the fourth one takes out the high of the 3 bullish candles. Hence we're looking for sales all the way from here up to this level. Down here there are still no 4 bullish candles, so we're still looking for sales. And you can see that we have 3 losses in a row. So let me explain quickly how the probabilities work. So you only take trades every after 3 losses in a row or 5 losses in a row. Those are the only trades you take. So if we notice here, there are 3 losses in a row. So 1, 2, 3 losses in a row. Every after 3 losses in a row, you always take the 4th trade. So we can see our 4th trade is right here. After this loss occurs here, after this you take this trade, it hits your SL right there, candle hits your SL, which is the red line. You haven't really taken this trade because it's still part of the probabilities. since you only had 2 losses in a row here, you can't take this trade. Yes, because the previous trade after this one was a win. So to make things clear, you only count the number of losses in a row every after a winning trade. If we notice, this other trade here was a profitable trade. I don't even need to draw the position too. We can see it was a profitable trade. So we can see it was a profitable trade. Now the candle opened here, never hit the red line, hence and it closed here, hence it was a profitable trade. So if we mark this up, it can be green. This trade will be green, and we can see it was a profitable trade. And the next trade was a loss, the next trade was a loss, the next trade was a loss. And according to the rules, if you have 3 trades in a row, the next trade is most likely going to be a win, hence you take the trade. And we can see that if we took this trade, it would have looked something like this. Something like this. Very, very low risk reward, as you can see, but in the long run it's still profitable because there are also trades with very extremely abnormal risk reward. So you can see that the trade opened here and closed right here, so it was a profitable trade. It never hit SL right there, and those are the trades you're supposed to take. And also you're also supposed to take every after 5 losses in a row. So if maybe let's say this was a loss and the next one was a loss, it means you have to take the 6th trade because it will also most likely be a win. So those are the only trades you ever take, every after 3 losses in a row and 5 losses in a row. If you have like 10 losses in a row, you're not going to take any trade. You're going to wait for a win to occur, then it resets, then you start counting how many losses in a row. If you have 2 losses in a row then a win, there's no opportunity there. You always have to wait for 3 losses in a row or 5 losses in a row, that's all, and you take the next trade, and that's how it works. So it's a crazy strategy. It's kind of weird, but it's still profitable, and they'll be testing it. So this is the strategy I'll be testing on this account. So I'll be testing it on this account, which is a demo account by Deriv. So you're obviously saying, hey, oh, he's trading demo accounts, but that's how you test things. Who the heck told you have to test things on a live account? Yes, you can test them on a live account, but obviously that's a dumb decision, unless if you lower your risk, like you lower your risk to the lowest degree. That's when you can forward test on a live account. But I will be testing on a demo account, and I'll be purchasing my forex fund challenge in August, so that I can start at the beginning of the month. And yes, so it's 10,000 USD, so that it replicates a funded 10,000 USD account. But obviously you can trade any strategy with any amount. It doesn't really matter. It depends on how much you want to make and your risk management skills. So yeah, otherwise this is the account I'll be using to test the gold strategy. So this strategy, actually I only tested it on gold. So these statistics whereby you only take every after 3 losses in a row, it doesn't apply to all the time frames. So if you're to be using the daily, initially I tested it on the daily, and the highest probability was 5 losses in a row. Yes, that was 5 losses in a row. When I went down to lower time frames, it even became more random. Like it was just way too random, and so I decided to stick with the 4H. I haven't yet tested it on other currency pairs. You can test if you prefer, but I would just be using it on gold and see how much profits we can be generating in a month. So it has an average of about 10 trades per month on the 4H. When I was testing it on the daily, the trades were even more rare, like 1 trade every 1 month, 1 trade a month, which says too freaking rare, but they were obviously more higher probability, but still works on the lower time frame. If you want to test it on other time frames, you can apply the same concept and just change the probability statistics. You just look at the patterns, how often are wins occurring. So as I noticed, wins were occurring mostly after 3 losses in a row or 5 losses in a row, and so you can just apply that concept on the other time frames, but I assure you it will be more random on the lower time frames, and I wouldn't want to deal with that. So yeah, it's the thing I'll be testing, and I'll be updating on how things will go. Otherwise, if you'd like to also test with me, you can do it. Otherwise, according to the results I got on the back tests, it's profitable, and the only thing that's remaining is forward testing it. But otherwise, it's a weird strategy. See how things will go. Anyway, if you made it to the end, really appreciate it. I'd also really appreciate a subscribe if you're not yet subscribed, a like, and hit the notification bell to stay tuned. Otherwise, thanks for watching. Peace.